Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the S&P 500, Dow Jones, Nasdaq, specifically SPY, which is the ETF of S&P 500, and QQQ, which is the ETF for Nasdaq. Basically condensed price points. And I'm going to go over the economic calendar, economic news, 10-year treasury, crude oil, so on and so forth. So hopefully you guys like the video. Hopefully you guys enjoy it. If you do, consider dropping a like. It does help the channel, so thank you so much for that. And then before I go through the technicals in terms of support levels, resistance levels, price actions, so on and so forth, I'm going to go over the economic calendar. Quick recap for today: durable goods orders previously was 0.7. It was expecting 2.6 and got 2.6 this time around. It was predominantly due to auto sales and planes sales. So then durable goods minus transportation, which is the transportation aspect, previously it was 0.1, this time around 0.2. Now the biggest factor is for tomorrow, like I stated in yesterday's video, towards the end of the day, the market will drop down because the GDP numbers are coming out tomorrow. So at 8:30 a.m. GDP numbers will be announced, and previously it was 3.4%. This time around expecting 2.2, which is like mediocre news. I'm going to go over that too. And in case if you're new to investing, just in case you don't know, I'm pulling it up just in case. GDP is gross domestic product, is the monetary value of all goods, final goods and services produced in the country in a specific time period. It is often used by governments to measure the economic health of their countries. GDP includes all output generated within a country's borders, and it does not double count intermediate goods and services used to produce them. And then also, according to the U.S. Bureau of Economic Analysis, GDP is a comprehensive measure of the U.S. economy activity. Changes in GDP are the most popular indicator of the nation's overall economic health. So that's the reason why it's specifically important for tomorrow. And then in 2022, the United States had the highest GDP at 20.89 trillion, followed by China at 14.72 trillion, and then Japan at 5.06 trillion, Germany, so on and so forth, and all that stuff. In the first 3 months of 2024, the U.S. economy appears to have grown by 2% or more for the 7th quarter in a row. So the thing is, given that number, previously it was 3.4. So the thing is, though, we're expecting 2.2 this time around. If it is lower, that's not great, right? Obviously, the markets will react negatively to that. If it's higher than 2.2, I think the markets will bounce up. And then if it's flatlined, pretty much depends on the rest of the sentiments, I guess, because, for example, initial jobless claims, that is important because it affects the somewhat affects the Fed's decision to cut interest rates. And if the Fed indications is showing that the Fed will cut interest rates this year, the market acts favorably, as it technically should, because then what happens is companies it becomes easier to borrow money. Not easier, sorry. More beneficial to borrow money, because if the interest rate is low and you could outperform that return as a company to get a higher yield on your return of investment, hypothetically, then the rate that you're borrowing it for, it becomes more profitable to borrow money to expand your business and invest in research and development, hire people, and so on and so forth. So yeah, so hopefully that makes sense. But at 8:30 a.m., initial jobless claims comes out as well. Previously it was 212,000. This time around expecting 215,000. So they're expecting more claims. Again, it's kind of bad, but if it comes in higher, it's actually good for the market technically in terms of indicating a price cut coming up for the interest rate, the Fed's interest rate. But it is what it is. At 8:30 a.m. as well, advanced U.S. trade balance in goods. Previously, it was negative 90.3 billion. We'll see what we'll get. 8:30 a.m. advanced retail inventories 0.5%, and then at 8:30 a.m. as well, advanced wholesale inventories 0.5% last time previously. And then at 10 a.m. pending home sales, previously 1.6%, and then they're expecting this time to be flat around. And then in terms of 10-year treasury, we're sitting at 4.646%. Again, this is important because the higher this interest rate is, or the 10-year treasury yield is, technically it takes money out of the markets, because this is a safer return on your investment. So when it's higher and you don't want to take risks in the market, you could just put your money here hypothetically. So technically markets go down, technically, right? But the thing is, it depends on how you invest, right? For crude oil though, we're at $82.79 per barrel. Again, important for inflation numbers in terms of energy costs and so on and so forth. Now, in terms of the markets, so as we saw, they did drop towards the end of the day, but at the very last, like after hours, they pretty much tanked. So I'll show you QQQ for a sec, or yeah, I'll show QQQ, just an example. So pretty much it closed at $426.51, right? But then after hours, from $426.21, it just went pretty much straight down to like $420.45, and then somewhat rebounded to $421.65. Again, these are after hours and pre-markets. So in terms of specifically futures later on and all stuff, you could almost neglect it because, again, the biggest factor is the news coming up for tomorrow, right? If it's really good, then everything will be wiped out and just be back to normal, and then we'll head up to new highs. Not new highs, sorry about that, but we rebound. And the reason why I want to mention the rebound is there's a chance markets might actually rebound, even though the 5-year and the 1-year are showing downside. So currently, for example, the DowJones, just to show an example, we're at 38,460 points, right? And if you look at the 5-year, just like the S&P 500 and then the Nasdaq, the 5-year shows in the MACD line that we're in bearish movement, right? So hypothetically more downside. Again, this is the 5-year chart. If you go to the 1-year chart, now it's starting to potentially cross into bullish movement, so to go to the upside. And if you saw before, like I've showed within this channel, bounce off support, hit resistance. It didn't necessarily bounce off support, but given the 1-year, and if the numbers are good for JDP, I personally think it's going to be pretty much close to like the 2.2. I don't think anything crazy. If it were to hit 3%, the market will act favorably, considerably favorably to the upside. So there's that, but there's a potential to go to the upside. But if you look at I don't want to look at the 6-month and 3-month and 1 month, just because the data will flip these, right? They're too short term where the data will just flip it. But the 6-month and the 3-month and the 1 month, let me see, the 1 month, yeah, they're all either heading to bearish movement or in bearish movement. So given that, it looks like potentially we could head down one more time and then head up if news is favorable to the upside. And what I mean by that is, like, for example, more continuous good news comes out where the Feds are going to cut interest rates, and then there's no interference with tensions in like the Middle East and all that stuff, so on and so forth. So if tensions stay like at ease and nothing persists to escalate tensions, and then the sentiment is that rates will be cut within this year, then the reversal could happen to the upside, right? But then basically take it day by day kind of thing and figure out how it is, because again, there will be resistance levels and so on so forth, just like there is support levels even when it drops. Now, in terms of let me cover the SPY first, I guess, and then I'll cover QQQ right after. So again, SPY, which is an ETF of the S&P 500. Once again, if we go to the 5-year chart, we are in bearish movement. Again, within this channel I've showed in the past, we've stayed within this channel, upward trend resistance line, upward trend support level, and then major levels as well too. Hypothetically could head down still because in the bearish movement, and I think the 1-year also shows the same thing as the DowJones. Yeah, so it looks like it wants to cross over to the bullish side. Doesn't mean it necessarily will, just because, for example, right about here in January 2024, it looked like it wanted to cross over to bullish side, but it didn't. It still dropped down, and we see the drop right there come back down. So we could still have another drop before we go to the upside, even though for the 1-year it wants to potentially cross over. But then if we look closer at six month, again, this could be changed because of the GDP numbers. Again, if it's flat though, it won't change that much personally. But 6 month is in bearish movement, 3 month is in bearish movement, and 1-year it's still in bearish movement. So again, it kind of looks like, nonetheless, unless the numbers are really good tomorrow, for the most part, we'll be heading down still in a way, just given the long-term kind of thing, right? In terms of long-term trajectory. Day by day, again, I'll cover the level of support and resistance, or actually I could cover that for right now for the S&P 500. So in terms of the S&P 500, we closed at $500 and $505.41. Again, just like QQQ, which is like Nasdaq ETF, we saw a major drop. So closed around 505.41 and then just straight dropped down to $501.61 after hours, and then recovered somewhat to $502.21, 35 cents. And then the question is, what levels are we looking at? So I'm gonna cover the top resistance and the bottom resistance, but at the same time give my input. And then, like always, by the way, this is just my opinion, so please do your own due diligence and research before buying and selling. I'm not a professional, so just going off data that I find and all stuff. So essentially, if we do end up going to the upside, we're looking at pretty much getting stopped from last time. What I mentioned was the $508, $509 price point. but pretty much hitting a ceiling at 510. It's going to be quite difficult to pass the 510 from last time I measured, but specifically between the $508, $509 price point. And then if we go to the downside, we pretty much have support at the 500. Well, the problem is we do break through it, so I don't think necessarily we'll count it, but I was going to say the $503 price point. But either way, the 500 one is pretty much the support level, so 500 to 499. And then right after that, we're looking at the 497, 498, 494, 495, and then 493 utmost lowest. But personally, I don't think we're going tomorrow down lower than 495 if the JDP numbers are bad. So either 495, 494, or 493. The 493 would be the utmost lowest, but again, personally, I think 495, maybe 494 and 80 cents when I was checked it or something like that. That would be the lowest. And then on the upside, again, if we do spike up, I think we'd probably pretty much close at 510 most highest kind of thing, given those levels. But 508, 509, right? Again, the problem about tomorrow specifically is it's literally strictly news dependent in terms of JDP numbers. That's the problem. When it's not news dependent, you could rely more on analysis. On the analysis side, it's just pretty much thrown out until the news clears up. But again, the moving average is pretty much targeting 505, 506. But again, that's where we close. So it all depends. Sorry about that, Fred, because based off of news, it could literally throw this out the window for the most part. But it's always good to know the levels, right? Now, in terms of the QQQ as well, 5-year chart shows this in the bearish movement, and then the 1-year chart still bearish movement. So again, still more downside to come. And then if we look at the 6-month, crossed over to a bearish movement. So the 6-month is showing downside for sure for the QQQ, which is the Nasdaq ETF. And then 3-month bearish movement as well. And then the 1-month bearish movement as well. So it's all pretty much news dependent. Like I said yesterday, the 530 is a ceiling, $530 is a ceiling. We closed at $426.51. After hours, we're looking at $421.69. And like I said yesterday, the $430 price point is a major ceiling, and that will still act for tomorrow, in my opinion. So in terms of ceiling completely, let me just go to a 3-month chart fully. Right about here, that's still going to act as ceiling again. So even if we have good GDP, act as ceiling / the 432, 433 price point range will be the second ceiling. I personally don't think we're going to pass 433. Those two levels will be the major ceiling for the most part. Again, 432 to $433 price point for the upside. And again, it's going to be quite difficult to pass 430. So pretty much maybe consolidate there and then continue to go to the upside from there, hitting the second ceiling. But then on the downside, given that we pretty much dropped down all the way to 421, there's almost two major plays that's going to happen. Either the $420 price point, because that is a support level, holds, or we trickle down to 417, 418. But the problem is that 417, 18 doesn't tend to hold. It drops down to $416 price point, give or take. And then technically, I would say we could potentially drop down to 413. So the 416 is pretty much bouncing off of, where was it? Right about here. So within this level right here, you see that it hits like a resistance / support level right about here at 416, give or take. But then we could get down to here again, which is about the $413 price point. I would say we could technically visit again if the gap didn't fill. But if you zoom in, the gap did fill because it gapped up and then it came back down to fill that gap and go back up. So because it's already filled up, I don't think $413 will be in play. Again, this is GDP numbers dependent, right? If the numbers are bad, then the market will go down. If the numbers are good, it'll go up. So specifically, if we do go down, it's not really bad, but pretty much really bad, I guess, is it'll go down 416. Again, I don't think it'll hit 413, but that is a possibility. And then I'm expecting some kind of bump up. But if it goes insane, I don't think it's going to go insane. But either way, we'll see. Again, this is all news dependent for tomorrow specifically. There are other levels we could rely on, but that'd be a crazy drop for tomorrow. So, but yeah, hopefully you guys enjoyed the video. That's it for today. But thanks again, guys, for watching. Appreciate it, and I'll see you guys in the next video. Take care. Peace.